Monthly federal job additions is always the core U.S. and global macro fundamental, lifting or lowering earnings forecasts across the broad S&P 500 share price index. Our chief equity strategist and economist John Blank here now to expand on that for us. John, what did the latest job additions data reveal about the state of the civilian labor force?
Well, Terry, we're talking on March the 28th, and we have two pieces of information to consider now. One is that we have 151 as the reading for January, and we have a projection for next Friday of 128. And along with that, we have a projection for the rise in the household unemployment rate to 4.2% from 4.1% for next Friday. So, in truth, we should probably be speaking about next Friday, which is the plus 128, which might surprise you as a consensus is not as low as people would have thought after 2 months of DOGE. And in January, Terry, we did get DOGE announcing 10,000 job cuts, which were, if you put that on top of the 151, that would be 161, which, again, not as dramatic as you would think, given the news flow. So I would think that the real point of the macro data prints that are coming out this Friday is to bring us all to reality of what really has happened.
So, just to clarify, the DOGE job cuts have been reflected in prior numbers, and you think they're going to continue to be reflected in next week's numbers?
Yes, they do break out federal job cuts. Last January, I should say February job cuts for the federal workforce were 10,000. March job cuts that are coming out will be broken out and reflected in the report itself. So this is one of those things where you can go to the Bureau of Labor Statistics website, get the actual report, and you can read it and find out exactly what the number for federal job cuts. And I would explain to people, government job cuts and job additions include state and local and are often dominant in additions or subtractions. So it is relevant to look for federal level job cuts because that will be the DOGE thing.
Okay, so how has this data already impacted the share market pullbacks that we've witnessed recently?
It hasn't had any effect, Terry. The only thing that has had an effect is a forecast from the Atlanta Fed GDP now that it was minus 2.8. And that, continues, with weak readings this morning on income to suggest there was hesitation on the part of the consumer in the first quarter. That caused the pullback, or at least contributed to it.
And has it had any impact already on the economy?
We shall see, Terry. The first quarter ends on Monday next week, and then we'll start to get the array of actual government data on this. I think, my message to most people is to not prognosticate, but to pay attention. And we will soon get, in the next 3 weeks, the actual statistics on the first quarter, and that will be relevant.
And what about impact of this data on S&P 500 earnings forecasts going forward for the year?
Well, I would tell you that the macro fundamentals that are baking themselves into the first quarter of 2025 already have shown a pullback. We used to be at 8.5% rise in earnings for this quarter coming, and now it's down at 5.5%. So it is being reflected in declining estimate revisions in the first quarter. However, 5.5% for the first quarter, so winter quarter, is not terrible either. So I should point out, it's certainly not reflective of a recession. It's just it is reflective of some restraint on the part of the private sector.
Do you think, you kind of alluded to this, but do you think future DOGE job news is already priced into the markets and the economy?
Yeah, to some degree, but you have to remember we were at very high evaluations entering January, and there was a lot of euphoria out of the election. That the 90% of what came out of the stock market's valuation was euphoria, and I think the DOGE prints that are forthcoming will probably be really interesting to see how the stock market treats them, because it will be the first time that the market actually deals with the actual data of what has happened. And but I would tell you, I don't think the DOGE thing is the real cause of the correction. I think just a bake off of the euphoria and profit taking was the biggest part of it.
So is the sell-off that pushed the S&P 500 into correction territory recently over, or have we not seen the bottom yet?
I would hesitate to say we found it's over, Terry, because the VIX did not get over 30 on that pop down. And, we usually I need a capitulation moment of the VIX option volatility index at 35 or so. So the real fear and panic and people running for the doors did not happen. And it may not happen. It may just be people taking profits, like I said. But when you're drifting around under the 200-day moving average, as people like to say, not a lot of good things happen under the 200-day moving average, and that's where we are with the S&P 500. So it's a very cautionary approach for most stock traders when you're under the 200-day moving average, which we duly are. And I would think the next month or two, more likely rocky than not.
How do you see the federal rate news that came out recently affecting the markets, especially over the near term?
Terry, as long as they're talking about 1, 2, or 3 rate cuts for 2025, they're talking about a soft landing. And it doesn't really matter if it moves to 3, 2, or 1. The real big issue will be if, we get, we're at 4.33% on the Fed funds, 8 rate cuts and a big plunge down because of some worry or massive liquidity infusion out of emergency measures by the Fed would be much more worrisome. And by the way, that did happen in 2023 with the regional bank thing. So all you're learning from the Federal Reserve projections is they still think it's a soft landing, and they have incorporated tariffs into that outlook. And they're still saying growth's cut, prices are going to be a little higher. We're still expecting a soft landing.
All right, 3 large cap stocks experiencing major share price momentum runs of late include JD.com, Coinbase, and Robinhood Markets, Inc.
Yeah, JD.com is a Chinese name that people should know about. It's number one strong buy on the list, value of A, growth of A. And its pricing, I got it at $42 a share with a $48 price target. But Terry, it was up to $100 back in 2021. And this stock next year will make $5.07 a share. So, you rarely get a chance to find a stock that's beating, EPS surprise of 13, last 4 EPS surprise of 25%, and a PE ratio, Terry, of 9. So the chart looks excellent on JD. The momentum is good. The value is there. And all you got to think about, of course, is whether you want to own Chinese stocks or not.
And Coinbase.
Coinbase, I got a target price at $219, Terry. We are at $188 after a big pullback. But Coinbase went down with Bitcoin, of course, but it's still a number one strong buy. And I got $8.72 in earnings next year. 25 PE ratio now, Terry. That is respectable, particularly when you got the last EPS surprise at 75% and the last 4 EPS surprise at 46%. So take a look at Coinbase.
And Robinhood Markets.
Robinhood is, the classic, COVID story, online trade. There's 25 million subscribers to this thing. It's still big. And it surged up the last year from $20 a share to $60. Now it's back down again, and I've got a target price of $46 with a $44 share price. The growth score here is A, and the Zacks ranks number 2. And last EPS surprise 29%. Average of the last 4 surprises 81%. So I'm not a mover on this stock, but I think you should pull up its chart and pay attention to it because it's now at a technical level that's a little more respectable.
And I believe I heard news this morning that they are going to be expanding their financial service offerings for their customers.
Yeah, they have done a lot of M&A work to get into wealth management and be kind of like a normal finance company, Terry, because they got, loads of people up there in Menlo Park knocking on their door telling them that, look, now you got all these customers, why don't you sell them all kinds of more stuff?
All right, our chief equity strategist and economist, John Blank, on the labor force, the market, and more. With John, I'm Terry Ruffalo. Here's a question for you. Why are insiders buying company stock with their own cash? Can only be one reason. They expect a price jump. Zacks is revealing the best of these buys for a limited time. Go to Zacks.com/promo for details.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.